I'm Jonathan with the Lundy Group Real Estate Team, and today I wanted to talk about what I would do if I were a first-time homebuyer in 2026. This is going to be part of a two-part series. Next time, we're going to be talking about what would I would do if I were a first-time seller. I know you were guessing it already. What would I do if I were a first-time seller in 2026? That'll be next video. So today, let's dive in. Let's talk about the nuances. Let's talk about what I would do if I were that first-time buyer. Well, the first thing I would be doing is I wouldn't be waiting on the perfect timing, right? To me, there's no such thing as perfect timing. Rates are going to go up and down. They do historically. Prices are going to go up and down. And oftentimes those two don't necessarily go up in relation or in direct relation. They go in opposites, where you'll have rates drop, but prices go up, or vice versa. So I wouldn't wait for that. Second, I wouldn't be waiting on, I need to wait for more homes to hit the market or less properties on the market. Instead, what I'd focus on is stability and affordability, and truly what I am looking for. See, one of the stats I heard recently is that homes historically increase in value, or they double in value every 18 years. And when you look back in history, you actually see that homes have just progressively increased in value. So the longer I wait, actually the more I cost myself. So what I would do as a first-time home buyer is I would focus more on why am I buying? Am I buying because I want this to be a future investment? Am I buying because I'm getting married and I need some extra space? Am I doing this because I'm having kids? Am I doing this because it's just gonna be my first time home and I'm getting out on my own and it's just me? The point is, what I'm looking at is, what am I needing in a home? I'm gonna focus on that. I truly think it's always a great time to buy the right piece of real estate. And so I'm gonna focus on why I'm buying it, not necessarily making sure that I time it perfectly. Second, I'm gonna get my financial picture right first. So what this means is a minimum of 3 to 6 months expenses saved up in a high yield savings account before I purchase a home. And keep in mind, when you purchase a home, your expenses are going to go up. So I would figure for that, making sure that I have 3 to 6 months worth of expenses saved up. Second, I'm going to make sure I don't have any major new debts incoming. What does that mean? It means I'm not taking on debt for other purchases right before I close. So if you've been watching my videos, you probably know I'm not a big fan of consumer debt, specifically high consumer debt. I think that if you're going to buy couches, cars, clothes, I would recommend doing your best to just pay for those and save debt for income producing assets or your home. Next, I would make sure I have a strong pre-approval. This means talking to the bank before I call about houses, before I actively go try to look at properties. I really want to know what the bank tells me I can afford, and I'll talk about that here in a minute. I really want to make sure, though, I can afford a home and what I can spend. And then finally, this is what I said I'd talk about in a minute. I want to know what I can comfortably afford, not just what the bank says I'm pre-approved for, right? The bank may say, hey, good news, Jonathan, you can afford $2,500 a month. And that sounds amazing. But when I look at my budget, can I comfortably afford $2,500 a month? Does it meet my investing goals, my food budget, right? Does it actually fit inside what I can comfortably afford? If I can only comfortably afford $1,000 a month, then despite the fact the bank said I could do $2,500, I would highly recommend looking at the lower number. So again, quick recap, financial picture right first. Make sure you have 3 to 6 months of expenses saved up. Make sure you don't have any new debts. Make sure you have that stronger pre-approval. And finally, make sure you know what you can comfortably afford. Next, third thing, when I'm shopping for a home, I would be looking for and eventually purchasing a home that I can grow into. So what do I mean by that? I mean looking for a home that has more for the money, right? So what I'm looking for is, if I need 2 bedrooms, can I maybe get a 2-bedroom home that has more square footage where I could add a bedroom, or maybe 2 bedrooms with a bonus room? If I really want 3 bedrooms and need 3 bedrooms, maybe I'm looking for a home that has 3 bedrooms with an office, or similarly 3 bedrooms with space to make an additional bedroom in the future. Maybe the home I have today only has 1 bathroom and there's space to add a bathroom, or it has a half bath that I can convert into a full bath, right? What I'm looking for, what are the things that I can create value later or build in value? Does it have an extra large yard? Is the layout and the location, are these things that are value adds in the future? I would prioritize school districts, even if you don't have kids, because resale in the future matters, right? I would prioritize the extras for the same price. This doesn't necessarily mean if I am looking for a 2-bedroom home that I would say, oh, let me stretch and get a 3-bedroom. No, again, I would look for how how can I get the most in a 2-bedroom home? Maybe it's a larger 2-bedroom home. If I'm wanting to buy a 4-bedroom, 3-bathroom home, I would still look for where can I get that additional space? Maybe it's in a basement. What can I do to have a value add in the future? Finally, I would not overstretch, right? I think I talked about a little bit about this before, but I would not buy a home that's at the top of what I can afford. You need to add margin for repairs, life changes, right? Layoffs, significant other getting laid off. You need to leave margin for investing. You need to leave margin for peace. Truly, peace matters more than granite countertops. I would make sure that I'm sleeping really well, really comfortably with that monthly payment. Finally, and I've already hinted at this, I would think of this home or try to think of this home as if I was an investor, even with my first time home. You've already heard me talk about making sure that I can have value adds. Well, why am I doing that? It's because I want to force appreciation, is what we in the investment space call it. I want to take a 2-bedroom home. Maybe I live here 3, 4 years. And if I've upgraded and I had space where now I have 3 bedrooms, or maybe I added a bathroom, or maybe I converted the garage, different things that I could do in order to take my investment, my first time purchase, and when I sell it, make it where I've got extra money in there, right? It may be just as simple as buying a property that sits on 2 lots instead of 1, where I can sell off the lot to a builder, or maybe I could build the home, right? I would truly look at this first time purchase, understanding that it's probably not my final destination. It's just a stepping stone. So, and then I think I said the last thing, which was the 5th thing, but truly the last and maybe the most important thing to do is I'd call the Lundy Group. Okay, I'm kidding. But really, I would love for you to call us, text us, 417-208-9633. We would love to walk you through all the steps and make sure that you get into a first home that you are proud of and that helps you in the future. Until next time, I'm Jonathan Lundy, and I can't wait to talk to you.